Ladies and gentlemen, good day and welcome to Sportking India Limited Q1 FY26 earnings conference call hosted by MUFG Intime India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Darshi Jain from MUFG Intime India Private Limited. Thank you and over to you, ma'am.
Thank you. Good afternoon, everyone. Welcome to the Sportking India Limited Q1 FY26 earnings conference call. Today on the call, we have Mr. Munish Awasthi, Chairman and Managing Director, Mr. Sandeep Sachdev, Chief Financial Officer, and Mr. Lavlesh Verma, the Company Secretary. A short disclaimer before we start this call. This call will contain some forward-looking statements which may be based upon our belief, opinion, and expectations of the company as of today. These statements are not a guarantee of future performance and will involve unforeseen risks and uncertainties. With that, I would now like to hand over the conference call to Mr. Sandeep Sachdev, the Chief Financial Officer, for his opening remarks. Thank you, and over to you, sir.
Good afternoon, everyone. First of all, I would take you through the financial performance of the company for the quarter ended 30th June 25. For Q1 FY26, Sportking India Limited achieved revenue from operations of INR 585.8 crores and gross profit stood at INR 157.2 crores with an increase of 2.1% on Y-on-Y basis. Gross profit margin expanded by 254 basis points year-over-year and further 21 basis points quarter-over-quarter. The gross margin for the quarter stood at 26.8%. Gross margin for the quarter was aided by stable and softer input costs given largely range-bound cotton prices over the majority of the foregone quarter, enabling better inventory management. Operational EBITDA stood at 70.5 crores. EBITDA margin expanded by 40 basis points on YOY and 22 basis points over the sequential quarter to 12%. Profit after tax was 35.2 crores, seeing an increase of 10.5% year-on-year. Profit after tax margin was 6%, experiencing a margin expansion of 98 basis points on yearly basis and 26 basis points on quarterly basis. Share of export on the revenue was approximately INR 341 crores for the quarter. The company had another quarter of strong showing over the export front with an overall mix of sales from export increasing to 58% in Q1 FY26 from 47% Q1 FY25. Overall quarter exports have increased by approximately 18% year-on-year. Capacity utilization at 95% remains at the same level as the Q1 FY25. Both cotton yarn production and cotton yarn sales remain marginally higher in Q1 FY26, coming in at 20.9 metric ton and 20.3 metric ton respectively. Thank you all. Now I will hand over the call to Mr. Munish Awasthi, CMD of the company, for his remarks on the results and the outlook.
Thank you, Sandeep ji. Good afternoon, ladies and gentlemen. I hope you have an opportunity to go through our press release and then get prepared. And then, as highlighted by our CFO, this quarter we maintained our trajectory of margin growth, delivering broad-based growth across all key margins. On the business front, exports remain robust in spite of a lot of geopolitical tension around the world. On the macro front, despite the Indian cotton being largely stable over the quarter, we observed it to be inching up slowly as the quarter drew to a close. This rise in prices was caused by a combination of factors such as high inventory with Cotton Corporation of India, lack of fresh supplies in the market, as well as minimum support prices driving prices higher for buyers. The international cotton prices remain at a discount to Indian prices, and this gap is further accentuated by levy of import duty of 11%. Most of Indian textile players are at a relatively disadvantageous position from the point of view of landed raw material costs. Progress of the new cotton season is satisfactory, with almost same area planted as last year, and with good monsoon, early predictions are for good quality and better yields. The other key event was the recent declaration of 25% tariff on Indian goods by the USA. The USA is a very important end user market as far as textile players are concerned. The additional 5% tariff differential as compared to 20% tariff levied on other Asian players will have some adversary effect on Indian players' pricing edge. While we remain hopeful and of an amicable settlement being achieved soon, I would also like to highlight that we have very limited direct exposure to the US markets, but have a relatively larger indirect exposure to the US market through our international customers, who are currently better placed than the local players under the proposed tariff structure. About the progress of our ongoing programs, first of all, our SPV for solar power is on target to deliver the contracted power from 1st March. We are also committed to close our integration of our apparel manufacturing and dye house within this company in next 6 to 8 months. Our confidence in our business fundamentals as well as the potential of the overall Indian textile sector remains undeterred. We'll be undertaking a capex plan of approximately 1,000 crores as a part of Greenfield Capacity Addition Program to increase our spindle count by 150,000 spindles. This is a significant capacity expansion to approximately 40% over the existing spindle count of 3.8 lakhs. Existing capacity utilization is already at 95%, and thus upcoming capacity provides substantial headroom for growth and meeting growing demand for company's products. The timeline for this project is 12 to 15 months, and we are confident to wrap up the operations within this time frame. The capex outlay will be funded through a mix of internal accruals and term loans. The proposed spinning unit will be set up in the state of Odisha and will be our first diversification outside the state of Punjab. The geographic location of the upcoming plant will enable the company to better serve the eastern market of the country, enabling a diversified presence as well as better to serve the international market given proximity to ports. Amid ever-changing market conditions, our focus continues to be on producing quality products and building operational excellence. I pass on the call to the moderator to open the floor for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Param Vora from Trinetra Asset Managers. Please go ahead.
Hello, good afternoon, and thank you for taking my question. So what I wanted to ask was that regarding the ongoing tariff situation with US, so since we export to the US, so can we expect a turnaround like, decreasing the share of export to that country and focusing on the new geography?
Thank you for the question. First of all, we don't have any exports to US as a company. So there is no question of diversifying the exports when we don't export to the said country.
Oh, sorry, I must have misunderstood something. And my second question was regarding the proposed merger. So how do we anticipate the contribution to new value-added segments and company's overall revenue and profit margins?
So that, as we mentioned, that we are confident of achieving the integration of our apparel and dyeing capacity with us in the next 6 to 8 months. So definitely there will be the top line increase in the first year should be around 200 crores. And the EBITDA in that business is slightly better, so it will give us a better EBITDA, of course.
Okay, that answers my question. Thank you so much.
Thank you, sir. The next question is from the line of Deepak Ajmera from IGE India. Please go ahead.
Am I audible?
Yes,
Yeah,
sir.
yeah, please.
So my question related to the CapEx we are doing. So can you explain the ramp up and its
Sorry to
utilization?
interrupt you, sir. Your voice is breaking.
Hello.
Yes, sir. Please go ahead.
So my question is related to the CapEx that you are doing 4,000 crores. That I just wanted to know about its ramp up and its utilization and timeline for the same.
Yeah, as I mentioned in my opening statement that we expect to finish, to come up with the commercial production within 12 to 15 months from now.
Okay. And how much optimum revenue can expect from it?
We are expecting a revenue of around 1,000 crores from this, 1,000 to 1,200 crores from this new expansion.
Okay. Thank you.
Thank you, sir. The next question is from the line of Prerna Junjunwala from Elara Securities. Please go ahead.
Hello. Thank you for the opportunity. So just wanted to understand the premise of this expansion, huge expansion, given that, the profitability in the yarn business continues to remain, under challenge. So what gives you confidence that, you'll make decent returns on this investment, and what kind of expectations do you have from this investment going forward? Do you expect the profitability of the spinning business improving over the next, year or two, kind of a situation where, the return provided by this capex is, strong enough?
Thank you for the question. So I will put it into two parts. First of all, these are one of the worst times for textile industry, spinning industry per se, with a lot of headwinds we are facing from internally and externally. Externally means with all the tariff uncertainties, and internally with MSP and import duty levied on the imported cotton. So in spite of all this, we are doing pretty well. As we are maintaining double-digit profitability for the last so many quarters, and we are working at almost we are fully utilized. So we see, we see these things, that this time will not last forever. I think 12 to 15 months. We see a lot of resolution happening over the next 12 to 15 months. So we are pretty confident. And about this particular investment, we have most of our capacity has been in Punjab. So the incentives in Odisha are much better, and we are, we see a jump of, 4 to 5% in EBITDA levels because of the incentives and the geographically, diversified portfolio. That and there will be many products which we don't make, which we'll be making, which are a little bit more profitable. So we are very optimistic about this, and so we are a conservative company. We took a lot of thought, over the last 1 year, and then we went forward with this. And we are pretty confident that this will help us in improving the overall EBITDA of our company by at least 200 to 300 points.
That's great, sir. So could you help us understand what kind of incentives you will be getting from Odisha government, and what kind of synergies you are looking forward to with this investment in Odisha?
First of all, other than the incentives, which we can mail you separately, there's a big list of that. Other than that, we are based out of North India, and this gives us an access to Kolkata market and Bangladesh market, which is closer to Odisha, and even the South Indian market, which is closer to Odisha, more access to those markets where we are not functioning right now. Secondly, Odisha is a cotton surplus state, one of the few cotton surplus states left in the country. And third is the proximity to the ports. So all these, factors made a lot of sense to us to venture into Odisha for our new project.
How far this project is from Odisha Textile Park, as that could be also good market for us to serve?
Yeah, thank you for reminding me. So we see a lot of investment, downstream investments coming in Odisha. So when we signed an MOU, there were many garmenters from Tirupur and very big garmenters from India who are, putting up their plants in Odisha. So we see that as another opportunity to cater to that market also. And we are in the proximity of 50 to 100 kilometers from all of them.
Oh, that's wonderful. So do you have any plans to further forward integrate into fabric, given, then as a next step in Odisha?
Ma'am, definitely. Right now we are, undergoing an exercise to integrate our garment facility with this company, and I think we will be able to put it off within this fiscal. And we want to we have the opportunity to scale that business up initially in Punjab as it is, and then of course, we have the plans to go once we realize the full potential of our existing capacities, and those plans are of course there.
The last question on U.S. tariff. I understand you don't export directly to the market, but your clients might be exporting eventually to those markets. Have you seen any kind of pressure from the clients to share any kind of tariff with them?
No. See, ma'am, this is something which is just 2 to 3 days old, 4 days old, and though the first round of tariffs happened and everybody knew what was coming, so I don't think so anybody is asking to share any tariff and all. But how the new dynamics work, how the new costings are done, and how the new orders come is anybody's guess. But I know one thing for sure, that after these uncertainties are over, that with China being at 55% and being the major exporter across the world, so I think other countries might not feel as much pain as expected. But right now, definitely, it's very uncertain. The statements change every day. So definitely the sentiments around the world are pretty pessimist, and people are just not taking any decisions. So everything, but I think in next 2 months we see a lot of clarity, and everybody wants this tariff talk to die down. Whatever the tariffs, everybody wants to know what the tariffs are, and finally. And it's been going on for last 4-5 months. So we expect some normalcy to come back, in the business in next 30 to 45 days.
Oh, that's great. Thank you for the detailed answers. I'll wait for your email on the Odisha facility benefits to come in. Thank you so much, sir, and all the best.
Yeah.
Thank you, ma'am. The next question is from the line of Saransh Gupta from Swan Investments. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. So just carrying on to the previous participant questions in terms of the tariff.
Sir, you're not audible, please.
Yeah. Now it's clear?
Yeah, better.
Just to understand on the demand perspective and the spreads perspective. Now, since the end client that we are servicing are being taxed at the higher tariff, so how shall one look at the spreads in the near term? I agree from the medium to longer term, you seems to be more bullish, and beyond which we are also increasing our capex. But in the near term, how shall we look at this situation in terms of the spreads?
So I really didn't get your question very well, but anyways, I'll try to answer with whatever I got. So I think you have been asking about the spreads going forward, right?
Yes, sir.
So the spreads, initially, what we have seen, in this quarter, for first month, we have been pretty consistent at the similar run rate where we were in the last quarter. But going forward, it's very difficult to assess the situation with so much of uncertainty around us. So, we are well protected with, as the cotton prices have gone up, so we are well protected with, as we generally have a tendency to stock our cotton for the season. So we are protected from that angle, but how the market behaves and how, this tariff uncertainty pans out in next 2 to 3 months. So it's very difficult to answer, how the spreads will look going forward in next 2 to 3 months.
Okay. And in terms of your fresh investment that you are doing in Odisha, so you indicated that the profitability will be 200 to 300 pips higher than what we are doing it right now. So is it including the incentives that we'll be getting it from the government, or is it just the technology or the application of the technology that we are using it that will help us? And what payback period one should assume on the expansion?
So it's a combination of everything. I think the technology, of course, the new technology will be putting in will also help in improving the margins. Incentives is one second, and the third is the geographical advantages we will get with Odisha, with proximity to port and different markets, which are major markets where we are not working right now. So all the combination of all three we expect will help us in improving our margins, by 200 to 300 basis points.
The payback period?
Sorry?
Or payback period of the same?
We have not yet worked on that. So
the next question is from the line of Raman from Sequent Investments. Please go ahead.
Hello, sir. I just have a few doubts. So, what are the major countries to which we export?
We export
and if possible, can you give percentage breakup?
So most of our export, more than 50% of our export goes to Bangladesh. Then we export, the rest, all of the countries are in single digits. So like China, we do to Latin America and European countries. So we can give you a breakup, we can send you by mail.
So what about UK? How much percentage do we export to UK?
We don't do anything directly to UK.
Okay. So there won't be any substantial benefit for us with respect to the UK-India free trade agreement, right?
The benefit will only be indirect with all the apparel manufacturers within India who are exporting to UK. If they get more orders, they need more yarn. So that is the benefit we are going to get.
So then with respect to you, again on the export part, with respect to Bangladesh, how are the working capital or payables from the companies to which we export yarn to?
So we export under LC. All our exports to Bangladesh are under LC, and we get paid on time. That's it, right? So it's just all is an LC business. We don't do any CAD business with them. So all the dues are paid on time by the banks as the LC matures.
Okay. And so my last question is with respect to your greenfield capex, which so you are adding about 1.5 lakh cylinders additional, which will generate about 1,000 to 1,200 crores of additional revenue. So I just wanted to understand this plant this is a new plan, so can we expect the margins of this plan to be higher than the existing plan's margin?
Yes, sir. I think I have discussed it in the previous question, addressed this in the previous question, that we expect our margins to be better with this plant because of different reasons, like geographical advantages, new technology, and of course, the better incentives given by the Odisha government.
So can you give any ballpark figures with respect to how much cost saving will it be with respect to traveling as well as the incentives provided by government?
So we said that, we are expecting a margin expansion of 200 to 300 basis points on our total overall company after we come up with our first expansion.
So this benefit can be seen by FY27 end?
So we will be coming in production by 27 end. So I think the real benefit will start showing in 27-28.
Okay, thank you, sir.
Thank you, sir. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity, sir. Given how the situation is currently, given the uncertainty on the tariff part and higher cotton prices prevailing in the Indian markets, do you expect our margins will go down from the current levels, or we can expect at least 10 to 12% of EBITDA margins to remain over the next few quarters?
It's very difficult to say, sir, but we are committed. I think this has been the case for last 2 quarters as well. The things have really, things have actually deteriorated from macro point of view in last few days. But yeah, you can expect the margins. We expect the margins to stay in double digits for next few quarters.
Okay.
Even under the present circumstances.
Okay. And on some, let's say, that tariff thing, some clarity emerges there and the rates are reduced. Will the cotton prices disparity that India has, or disadvantage that the Indian spinners have compared to the global peers, so that will continue to impact your overall margins, or if things emerge, or if the tariff reduces from the US part, some kind of improvement can be expected?
So there are a lot of things happening. The government is also contemplating to, do away with the import duty. Then, we have approached the ministry many times, and it seems they are serious now. And then, there are different permutations and combinations, how to manage your raw material, with less impact of duties and all. So we have changed our mix. Then, there is a murmur that if there is a bilateral trade agreement with US, then the duties, we might get to import US cotton free of duty. So it's all in the play. So we really don't know what's going to happen till it happens. But there are many things which are happening. We just say that things can't be worse than what they are right now. So we expect something to happen good in the foreseeable future with this, to do away with this imbalance which has been there for last 2 years.
Okay. Thank you, Mr.
Thank you, sir. Ladies and gentlemen, to ask a question, please press star and 1 now. Participants who wish to ask questions may please press star and 1 at this time. The next question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Sir, thank you for the opportunity. Sir, I just wanted a clarification that the new plant that will be adding up, So that will have 400 to 500 basis point higher margin than what we are making at our company level. Is that understanding correct?
So we expect our overall margins of our company to expand by 200 to 300 basis point after we add this 40% capacity.
Got it. And sir, this would be on our current spread. So if spread improves, our realizations will improve. Yeah. Okay.
This is as of today. Yeah.
Got it, sir. So I just wanted to understand on the payback, so on the operating profit that comes, 5-6 years. But if margins improve, spreads improve, the payback could be lower than the 5-6 years based on the current operating profit level that we are envisaging.
Yeah, I haven't done the calculation, but I think you can do the calculations. I haven't done it myself.
Got it, sir. Sir, on the fabric and the garmenting merger that we are expecting over the next 6 to 8 months, sir, have we onboarded new customers, or have we thought about where should this business grow over the next 2 to 3 years? And sir, how much incremental margins will be earning on this business?
So we are working. We've already started working on integrating those units, and right now we were just using those units to supply to our own brand. But we are preparing ourselves for by doing the social compliance and everything to do exports as well as to target big buyers. So that all task is ongoing, and we expect in next 2 to 3 years to double our garment business within the same capacity with minimal capex. So that is our goal right now, and I think that exercise is already on, and we would like to right now our revenue is about 150 crores from those units, 180 crores, and we expect to double it within next 2 to 3 years.
Answer on the margin front?
Margin front, definitely, as you go downstream, those margins will get better with the better utilization and better efficiency. So we expect the margins to be better than what they are in our existing business.
So can we expect it to be in the 20% range like our competitor Kitex or Cable Kiran?
It's very difficult for me to say right now. So we will be better than what we are, so let's see where we end up.
Got it, sir. So that was from my end, sir. Thank you so much and all the best.
Thank you, sir. The next question is from the line of Aditya Singh from Multi-Bagger Stocks. Please go ahead.
Hello, team. Am I audible?
Yes, sir.
Thank you for taking my question. I only have one question regarding the exports that you guys made. How much of it is to Bangladesh?
I can't. I didn't understand your question.
Your voice is not audible, sir.
Is it audible now?
Yes, sir. Please go ahead.
Okay. I'm sorry if this question was asked before, but I just wanted to know the amount of exports the country makes to Bangladesh.
Okay. So we do about overall our revenue 58% is exports, and out of that almost 60 to 65% is to Bangladesh.
Okay. That is the only question I had. Thank you so much.
Thank you, sir. The next question is from the line of Anil Kumar Sharma, an investor. Please go ahead.
Thank you, sir, and congrats for the great numbers. So my question is, you have mentioned that this is the first phase of 1.5 lakhs. And what is the total, what do you think on those lines? Further expansion, as you are saying, this is first phase. And out of that, it is internal accrual and loans you have said. How much is loan component and how much is internal accrual? What is your capital structure will be?
So our MOU with the Odisha government is for 300,000 spindles, And the first phase, what we are putting right now is 150,000. Once it stabilizes, we go for the second phase. About the capex of 1,000 crores, that I think we will be able to share by the next board meeting that what exactly will be the mixture. But generally, our mix is 30-70 in favor of debt.
Okay. So overall, our debt equity ratio will not be 0.5, more than 0.5, I think. That is your target, I think.
Sorry?
And overall, debt equity ratio will not be more than 0.5%. That is your target, I think.
Yes. Yeah. So we will be going by whatever our targets are, as stated before. So that, maintaining, reasonable debt is our foremost effort, and we were going to stick with those numbers that we had given before.
Sir, in contrast to that, are you getting this interest rate that is there, or that has been abolished? There are misconceptions about that.
So we have never got any interest rebate till now. In Punjab, we never had any interest rebate, so we don't get any interest rebate right now.
So interest now the rate will be normal rate, 9-10%, whatever it will be there. That is the cost.
So right now the average interest we pay is about 7%. So for the new project also it will be similar. But there are many other subsidies which will, which are there.
Okay, that is good. All right. Okay, thank you. That's all from us. Thank you, sir. Best wishes.
Thank you, sir. The next question is from the line of Dheeraj Shah from RJ Investments. Please go ahead.
Hello, am I audible?
Yes, sir.
Yes.
Yeah. So, firstly, sir, what is the realization profile like between domestic and export market for the quarter, given the sales volume was essentially the same, yet revenue was down by 8%? And also sequentially, so would it be fair to assume that the performance was due to lower realization? And what is the affecting realization what is the affecting realization?
So the revenue, the pricing in international market or Indian market is almost similar. The only thing is our product mix in our export and in our domestic changes. So most of the synthetic and synthetic dominated blends which we make are sold in domestic market, and most of the cotton yarn we make is exported. So there will always be a difference in the percentage and the revenue and the spreads there. What was the second question? I could not get it. It was not very audible.
Yeah. So actually, am I audible now?
It's breaking. Your voice is breaking, but still you can try.
Okay. Yeah. It actually. So it was actually about demand. Just a second. So actually, it was regarding the effective demand. Was it a demand issue or higher Chinese competition, perhaps on the polyester side?
I just cannot. You're not audible, please.
Dheeraj sir, can you come back in the queue? As
your
voice is breaking.
Sure.
Thank you, sir. The next question is from the line of Preeti Agarwal from SK Associate. Please go ahead.
Yeah, thank you so much for the opportunity. I would like to know what is the total potential of the capacity addition that can come up in the new Odisha facility. So your exchange filing says that the first phase is of 150,000 spindles.
Ma'am, we actually have signed an MOU with them with the Odisha government for 300,000 spindles. But circumstances permitting and the market permitting and how we go forward, we can go even further beyond that. So we'll be having enough land to go for even higher spindles if we want to.
Okay. And my second question is that INR 1,000 crores is proposed to be spent for capex with a mix of internal approvals and term loans. So what is the target debt to equity that you wish, or is there any approximate split of funding mix that you are looking at? Given you would also be needing elevated short-term debt for funding working capital.
So, ma'am, our goal is to to not go beyond 700 to 800 crores of long-term debt anytime in next 2 to 3 years. So we'll stick to that. So there'll be, I think, our long-term debt right now is about 300 crores, and out of that, I think by the time we take this new debt, about 100 crores will be repaid. So that is our this thing that it should be below the debt equity has to be about 0.5 to 0.7. That is the maximum that we will go to.
Okay.
And we are not looking at any other instruments. We are right now looking at just the debt as well as internal accrual.
Okay. And what is the update on Bangladesh situation in terms of land-based movement restrictions, and subsequently, how has the demand been?
And the demand from Bangladesh continues to be good. The land route is still not working. The people, you can't. But we expect, the elections. Bangladesh is expecting to hold elections in the next 3-4 months. We don't expect the land route to open before that. So we expect once the elections happen and the permanent government comes, and we expect, because even before it had happened and it took about 1 year for it to open. So we expect it to open finally, but I think it might take 6 to 8 months for that.
Okay. And a follow-up on that question, are there any other countries you're looking to diversify into?
And that exercise is always ongoing. So we keep on looking at the markets where we can sell our material, and so right now we are supplying to almost 35-40 countries, and wherever. So this exercise is ongoing. So we keep on looking at more options, and with this new spillage, once it comes, we'll have more capacity. Then we will look at there will be some more different kinds of materials we'll be making from that facility. So we'll have more options and more countries we will try to tap. Yeah.
Okay. And one last question from my side. Are there any power or tax incentives being given by Odisha government, or for that matter, any policy benefits been given?
Yes, ma'am. They have a textile policy, Odisha textile policy, which is open to everyone. So all those benefits will be getting those. Power benefits are there are one of them. Power tariff benefits. Yeah.
Okay, understood. Thank you so much. All the best.
Thank you, ma'am. The next question is from the line of Isha Murthy from MI Capital. Please go ahead.
Hello, am I audible?
Yes, ma'am. Please go ahead.
Hello, sir. So, what is my question to you is what is the update on the proposed merger scheme of the two unlisted promoters entities, and also by when do you anticipate it will be merged within the listed company?
Sorry, yeah. So, as I have mentioned before in my update and a few earlier questions, so that is going to happen in next 6 to 8 months. Both the facilities will be integrated with us maximum in next 6 to 8 months.
Okay. And also a follow-up question. Like you have earlier mentioned that you would be looking at capacity expansion into these new entities which are involved higher up in the value chain compared to the current business. So now with debt to be tied up in the capex announcement, so does this affect the timeline and the plan for capex within new entities once they'll come in?
Frankly, the capex needed to scale up those two entities is not a lot. So that is already, we've already started doing that in those specific companies. And it's just, improving the efficiencies and once we get to merge it with us. So we don't expect a lot of, there won't be any shift in timelines. We still expect, to double the revenue of those entities in next 2 to 3 years once we get merged with us.
Okay, sir. Got your point. Thank you.
Thank you, ma'am. Ladies and gentlemen, due to interest of time, that was the last question for today. I now hand the conference over to management for closing comments.
Thank you everyone for being a part of this call, and we appreciate you all being there. And if you have any questions or any queries, you can direct it towards the company secretary or myself or MUFG IR. See you all next quarter. Thank you.
Thank you, sir. On behalf of MUFG Intime India Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your line.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.